Good morning, everybody. Thank you for dialing in this morning. My name is Rebecca Jennings, and it's my role today to talk to you around some of our most recent research on mortgages in the UK and in the other territories in which we cover, Australia and Ireland. As I say, my name is Rebecca Jennings. I'm a Principal Client Advisor here at Global Reviews. We at Global Reviews, for those of you who've not come across us before, have been operating, providing comprehensive insight and quantitative data across a number of industries for around 17 years now, as I say, in the UK, Australia, Ireland and continental Europe. We cover a multitude of industries and brands from several types of financial services. We're going to talk about home loans today, but we also look at personal loans, we look at various types of insurance, we look at savings, investments, so the whole range of financial services products. We research energy providers, sports betting and gaming, higher education, travel, so a wide variety of types of industry that we are researching in terms of the kind of experience that consumers are having when they try to research a product and ultimately buy online. Our methodology that I'll talk to you about briefly in a minute identifies the issues that 95% of those consumers will experience when they try to buy from you online. It's a methodology that both looks at what consumers do, say, think as they go through that research, but also supplemented with a best practice audit that we conduct internally. So you've got the two perspectives, both what consumers are saying and experiencing, but also what the best practice is, what the site should have. And I say I'll touch on that in a moment. In 2017, particularly, we interviewed around over 1,200 mortgage researchers across the territories, had them complete a number of tasks across, say, around 24 different brands internationally. So that's what we're going to be drawing from this morning, is touching on the latest research, what the methodology does and gives you in terms of how consumers are looking for home loans, mortgages online, who's doing that well, who's doing that badly, and what can you learn from that experience. So what we're going to talk about is the approach that we take to understand those prospective home loans customers. What are the most important things to them when they're searching for a provider? How do we actually optimize that journey to meet the needs of these consumers as they undertake all their research? Who is best at this at the minute? Who is leading in helping these prospective customers across different territories at each stage of the journey, because it's not the same brand at every stage of the journey? And how can we measure success? So as I say, the methodology that we have is something called FRUITION. FRUITION looks at the whole journey from starting the research on a blank screen, go and do some research to find a mortgage provider, through that journey, and we follow consumers through that journey, and then look at the journey they have on specific brand websites, all the way through to expressing more interest, finding the application. So the whole journey from starting the research through to actually, yes, this is the brand that I want, and then looking at the experience they actually have on the websites altogether. For each study, individual study, 200 in-market consumers complete the research on their desktop, 150 on mobile. These studies are normally run each market twice a year, so 6 monthly, say on desktop and on mobile. Consumers are in their own homes on their own technology for their part of the research. They are in-market consumers, so consumers who are currently in the market for either taking out a new loan or changing their mortgage. So they are very much in the mindset that this is something they're going to be doing. We ask them to undertake some very specific tasks, so finding a provider to suit their needs, finding product range, fees, and matching a product to specific needs. So emulating the kind of research they would do in a real life situation. And this sample is recruited from a mixture of third-party panel providers. We don't have our own panel. There's no point. There are a lot of very experienced panel providers out there who will source the in-market consumers that we need on a regular basis. So, as I say, the discover, consider, act flow is really what fruition is all about, and looking at how you perform at each stage, how are you losing consumers at each stage, where are you leaking out of the funnel, and what can be done to stop that. Fruition is very much about actionable insight. It's not about giving you a 5-year, multi-thousand-pound, multi-million-pound plan to redesign the whole website. It's very much about saying, okay, this is the journey we have now. These are the points at which consumers are leaving your brand, saying actually they don't prefer your brand anymore, they're going to see somebody else. So this is about how can we plug those gaps. So say discovery is about these in-market consumers in their own environment. They start with a blank screen on either their mobile or their desktop, and they go and explore their options, go find a mortgage provider to find your needs. We can track everything they do. They download a little applet to their device, which means I know where they've gone, I know where they've clicked, we know what search terms they've used. So we can see how that discover journey evolves. After some research, they shortlist who, maybe usually 3 or 4 providers. They'd say, actually, I've got to a stage now where these are the most interesting. I'd spend a bit more time researching these guys. And then finally, they select a final preference. If you had to go for a mortgage now, who would you go with? So we have that discover journey. So we can see what influence the research journey has, what they're looking for, and why you're losing consumers in that journey. Why perhaps you were an initial preference, but you're not their final preference. Perhaps you made the shortlist, but not the final preference. Why? Why are you losing consumers across that funnel, and what can you do to plug the gaps? Then we move into the consider phase, where these consumers are allocated to a website that they're not currently a customer of, so there's no learned behavior. They are then asked to go through this journey of finding all the product range, getting a rate, a quote, finding fees, and matching a product to their specific needs that we ask them to match. So again, we can emulate that journey. I can see where they go. I can see their clicks. We ask them a number of questions about that journey. How satisfied are they? What would they do at this point? So there's a whole load of about 400 data points from consumers coming in here across this journey. But there's also around 400 criteria from a internal best practice audit that we conduct within Global Reviews, a yes, no set of questions that says, does the site have this? Does the site provide this at each stage of the journey? So we can match the two up at every stage of the journey. We can say, this is what best practice is, this is what consumers are saying, this is what the site is lacking, this is what's not working for you at the minute, and conversely, this is what's working for other brands. So what I'm going to talk to you about today is a little bit about how that works and some of the latest research that we've got out of this fruition studies that took place in 2017. I'm going to show you some of the data that you might see if you were a client and the kind of insight that you would be getting. But as I say, give you some highlights of who's doing well, who could improve, and who's doing well at each stage of the journey. So as I say, that's it's very interesting. In all the industries that we do, it's never one brand that's the top of every stage of the journey. Very interesting to see how that works. So from a discover point of view, the key things that come out of the discover phase in terms of understanding the process that consumers go through is this sort of stepwise idea of how people would prefer a particular brand at each step. So you've got what might be the unprompted recall. Discover is not a brand tracker, but we do ask at the beginning who spontaneously recalls the brand and percentage of the market. So you've got a baseline saying, okay, this is where we come from. This is when people start their research. This is who might possibly have thought of the brand. You have an initial preference for whatever brand it is. This will range from sometimes 0, sometimes the highest we get in some markets is around 22-23%. Big, if their markets are big, established incumbents, you might get a brand that gets a very high initial preference. So in healthcare, you often get the Boopers of this world get a very high initial preference because people say, okay, I don't know a lot about the market. I'd go with somebody I know. Seems like a big name. Often, say in some financial services markets, actually, it's significantly more fragmented. We're actually talking about mortgages here. This is a brand in mortgages. So we're talking about very small initial preferences. It's very, very fragmented. The same, we find the same across credit cards and loans. So again, you have an initial preference. You then have, well, what percentage of people shortlisted the brand? Okay, once they've done some research, they've discovered the brand, they've looked about what they do as a brand, they've said, well, actually, it's interesting. I'm going to put them on the shortlist to find a bit more information about. And then finally, we have the, well, actually, who would you actually choose as your final preference? And you get a percentage there. So you can track overall at a high level what's happened with this brand. The initial preference, it's got onto quite a lot of shortlists, but actually then it drops down in terms of final preference. And we have what we call the lost opportunity. That is the percentage of shortlisters who did not choose you as a final preference. Who did you lose at that last stage? You could almost say this is like low-hanging fruit, essentially. You've done enough to get on their shortlist, but actually when push comes to shove, you've lost them. So that for us, when we're doing this, is a really important statistics to figure out what that is, but also who these people are and why are they not choosing a particular brand. So this is a kind of overall view we can see of the market. We'll actually start to drill down about some things that are actually going on in the mortgages market, particularly in the UK at the moment. So as I say, we asked for initial preference, and then I say it's always interesting to see how that changes through the research process. There are some markets in which it changes more than others. So this is mortgages on the desktop. We do this both desktop and mobile, but this particular statistic is desktop, and we can immediately see there is some changes going on here. So you've got Santander leading in terms of pre-research, 15% of the consumers saying, actually, I'll go with Santander. That fallbacks to 12 at final preference. Flip side, you've got Nationwide going from 14 to 18. The biggest winner here, as you can see, is HSBC. HSBC goes from a 5% initial preference through to a 13% post-research preference. So immediately you can see there's something going on there in terms of the research is bringing HSBC to people's minds and making them think, yes, they've got something that suits my needs. So you can immediately see some of the shift there, as well as the incumbents moving around, or the bigger brands moving around a little. You've got a definite move with HSBC coming through there, and we'll see a little bit why that might be. We also ask, as I say, we ask consumers what they think, why they think what they think. So we've actually asked them what reasons are there for you to choose the initial preference brand. Obviously, and again, in every market we get a big drivers around previous use. We get big drivers around just a feeling of trust. So as I say, there are some markets in which there are incumbents that get very high initial preference because people don't know very many brands in the market and they gravitate to the one they know. So mortgages are a little bit more fragmented because people tend to know quite a few financial services, high street financial services brands. Also, what's interesting to see is the other elements that already start to come in. Now, these changes we go through and we get to shortlist and preference, what actually drives final preference. But you're already seeing they have the best product for my needs. You're not necessarily seeing they were the cheapest. You've got the best interest rates in there as well. But you've very much got this thought that it has to be the best product for my needs. I'm not just driven to something that's cheap. I need to have something that proves to me this is actually going to meet my needs. We've got some elements around the website, the products offers easy to understand. You've got some elements around service as well, so provide good customer service, high there, but also good online member services. Seems to be a little bit more important in Australia than the UK at the moment in terms of a driver to initial preference. And again, that changes as we go through. But again, first to fifth, initial preference driven, trust, previous use, but already you're getting to customer service, best product for my needs. And that will come through as we go through the website, looking at the website journey and saying, well, actually, what do you do through the journey to make sure consumers come away thinking and confident that you are going to provide good customer service? What does the website do to provide reassurance on that? But also, how does the website make people come away thinking they actually have found the best deal and product for their needs and not just the cheapest or not just the first one that came on the list because there's hundreds of them and they couldn't work out how to sort them out. So thinking about needs. What we can also do in the discover process, as I say, is see exactly where people go in this research journey. It's usually quite complex. As you can see here, this is just a snapshot of a journey just to show you the idea that people tend to go to search at each point in the journey. It isn't just at the beginning. They do tend to use them at the beginning of the journey, but then go back to them after they've done a little bit of research. So very much, I'd say, the stepping stone idea. It's not just at the beginning of the journey. They are feeding all the way through. They're also using comparison sites all the way through the journey, again, which is interesting. And we see in a moment the influence of the aggregators. And again, it will show us what's going on in terms of some of this movement that we're seeing in preference. The comparison sites are being used at all the way through the journey as well. Again, they're not just a filter at the beginning to make people aware of some of the brands. They're actually influencing the decisions all the way through the discover journey. So people sort of research, they refine, they compare, they go back to research. It's a complex journey. It is a complex product. You might find a different route path and a different usage of search and comparison in, say, motor insurance, where people just want to go in and get it done. It's all very much for muchness, the product. It's a shorter journey. It's shorter research time, but certainly within mortgages and complex financial services products, the influence of the search and comparison is felt all the way through the journey. And as I say, it's interesting when we start to drill into the actual influence that these aggregators particularly have on preference. So we can have a look at where people go. As I say, we can say who used aggregators. We can then look at the percentage of those users who preferred a brand at the beginning and then preferred a brand at the end. So what I can say, what we can look at is, does visiting an aggregator have an influence on people's final choice? And the answer is certainly in the UK for some brands very strongly. So we've got here a graph on the left where 36% visited an aggregator in the process of this journey. 47% of those who visited an aggregator shortlisted HSBC, and 31% of those who didn't visit an aggregator shortlisted HSBC. So you can immediately see that there is a beneficial attribution from visiting aggregator towards HSBC. We already saw from the beginning graph that HSBC had a big swing from initial preference to final preference, more so than pretty much any other brand. But what we've got here is starting to show some light on why that might be. It would definitely appear that visiting aggregator is positive for choice shortlist to HSBC. It is less positive for other brands. There are other brands that certainly suffer from the aggregator journey, but for HSBC, it's definitely positive, and they say that is something that's driving that swing from initial to final preference. We see the same in other markets. In Australia, 13% of those who visited an aggregator shortlisted CBA. 76% of those who hadn't used an aggregator shortlisted CBA. So again, we see that in that case, it's more a case of the aggregator visit isn't particularly helpful for the brand. So you can start to look at individual brands and go, okay, they are really benefiting from people going to aggregators. Let's have a look at why. How is their aggregator strategy working? What are they doing? But equally, you can other brands going, okay, aggregator strategies not working. They're suffering here for particular reasons. So they've got to do even more to try and make sure they get onto shortlists and they get onto final preference lists, because that aggregator journey is not helping. So then we get to that next stage and we're saying, okay, you've got to that shortlist, you've done that research, you've been to the aggregators. Why are you actually then picking the final preference? And again, we can start to look at, well, what's the swing? Who chose you at the beginning? Who chose you at the end? Why are some people swapping out? Why are you losing people? And equally, why are you gaining people from other brands? So again, looking at the UK versus Australia, again, some differences here. Still being driven by reputation and current customer. That's again something we see at every single market we look at. Previous use, but again, some of the biggest things here coming in, best mortgages offer for my needs. So this idea that people aren't just looking for a list of products, they need to be convinced that what it is actually suiting their needs particularly. Also got trust. Trust is something obviously that the site can do a fair amount about in terms of reassurance through the journey. Even if consumers come in with a level of trust, it's very important for the site to then reinforce that all the way through from the beginning to the final end of the application to make sure you don't lose that. And we can also start to do is looking at what percentage of people swapped. Say they made an initial choice, what was their final choice. So you see some brands like ANZ, 92% of those who initially preferred them chose them as final preference. Unfortunately, what ends up happening is that they're not, in that case, also gaining an awful lot of new consumers. So it can be positive. I mean, it's a good thing, obviously, you hold on to your initial preferences. But what happens is you also need to make sure that you're essentially stealing preferences from other brands as well. Otherwise, it's almost a sort of self-perpetuating circle. You carry on with the consumers you've always had, and the user base never gets any bigger. Flip side, you have to look at something like 69% of Santander, 69% of those who initially chose them as final preference. But again, that you have to delve into that a little bit more deeply. Just on its own, you say, okay, well, you've lost 31% of consumers, haven't you? And we can look at who they are and why you've done that. But also, actually looking at it when you delve into the Santander numbers, you can see that they have attracted a swathe of consumers from other brands, from the Barclays of this world, for example. So obviously they have an issue in terms of they're losing consumers, but they're also gaining them from other places. So it's important to start to unpick exactly what's going on behind some of these statistics rather than taking them just at face value. And obviously what's also extremely important when you get to the end of, say, the discover phase is to say, why didn't you choose brand as final preference? Okay, you put 60 or say 35% of you put the brand in the shortlist. Why didn't you finally choose them? And also then looking at those people who didn't even shortlist the brand, or why did you not even pick the brand as shortlist? And this is often just as interesting in sometimes more so than why they did choose the brands they chose, because it shows you the failures of the brand in this discover phase. So in the phase where people are going to do the research, they're searching, aggregating, they're going to the home pages probably of the key websites they're interested in, getting a quick first impression. They're not spending an awful lot of time on the websites in the discover phase. We're spending more time on that in the consider phase. This bunch is very much about first impressions. So why is the brand losing consumers? So things like the brand I preferred is more of a brand for somebody like me. So we're now getting back again to this driver that is, I need something that suits my needs. I need to be sure that you can meet my needs specifically. I'm not just getting drawn in by the rate that's on the home page or freebies. I need to understand you're actually going to suit my needs particularly. And that's clearly what's a big problem here in terms of shortlisting. 43% of those who shortlisted the brand, in this case, didn't choose it because they felt that the brand they preferred was more of a brand for somebody like them. They didn't feel this brand was going to meet their needs. In terms of people who didn't even bother to shortlist the brand, again, similarly, that kind of thing is a driver. Other people providing very value, but you also get issues coming in here of actual research in terms of no detailed fees and charges provided. They came away with the impression, again, normally in a sort of fairly short research process, but they've come away from this brand saying, well, actually, I had a quick look and it didn't seem that it had the information that I need. And this is obviously, again, a failure on the landing pages, failure of the initial impression of the website to not communicate that information you have will be here, you'll be able to find it easily, we'll be able to give you all the information you need. So as I say, you've got to a stage where you've now got all of this information coming through that gives you some insight into why consumers might not have picked you as their home loan provider. You look at what drives shortlisting, what are we not doing, why are we only making the shortlist for a minority of users, how we're not providing information to persuade people to trust us, how we're not providing information that makes them think they have the best offer deal for my needs. Then we actually look specifically and say why they don't pick me as a brand, say, and again, very much about the brand I preferred, more a brand for somebody else, again, so we're lacking there. And then again, you can look at final preference and go, well, actually, once we've got to shortlist, we're then losing more than half of consumers because we're not supporting them sufficiently in terms of making sure they can trust us, information about best offers for their needs, as well as the best interest rates altogether, overall competitive rates, but also they suit my needs. And again, we've got this idea about why people don't pick the brand X at after shortlisting, again, as well, very much about brand for me. So as you go through the discover phase, we can see where people go, their initial preference, we can see their shortlist preference and why they're making those choices at that point and where they've been, how aggregators are influencing that. We can then see why they make the final choice they make, but also why don't they pick you. So that's essentially what we get to in the discover phase. We get to an area where in this home loans market, people do change their preferences from initial preference to final preference. So there is scope to change people's minds, there's scope to influence consumers. Consumers are looking for proof of reputation and trust. They are looking for information that suits their needs. They're being convinced that you have a product that actually suits their needs specifically, and you are a brand for somebody like them. So that all is very interesting when we go into the consider phase and says, okay, well, now you've done your journey, done your research journey. We now want you to go to a specific website and undertake the tasks around finding the range, finding a product to suit your needs. And we also then, as I say, do the internal audit conducted internally by global reviews. So at every stage of the actual website journey, we can have insight from the consumers and from the audit. The overall output from the consider phase is a score. And what I always say here is actually the score is almost the least important bit of the whole experience, the whole research. It's interesting because we can benchmark it. It's obviously something we do on a 6-monthly basis, so you can see how this changes. And we do get changes. You can get changes of 4 or 5% across a 6-monthly basis. So you do get changes in the leaders quite often in these markets across that period. Obviously, what's most interesting is how the score is made up, the pain at each stage, and we'll look at that and in a moment. But this at least gives us a snapshot of who might be doing best in the market at the moment, who might be doing worst. That's not necessarily the same across devices. You can see here, HSBC particularly doing better on desktop rather than mobile. And again, that comes out very much when we look at the final preferences in the discover phase. They definitely do better on desktop than mobile. A lot of the other providers very, very similar. But also the other thing here is very close scores. Here we've got the top 6 within about 8 percentage points of each other. And like I say, there's definite scope for that to move around within a 6-monthly basis. But at the moment, you've got scores of around 57, 58 for HSBC and Nationwide on desktop, a little bit lower on around the mobile. But as I say, what's really most interesting is what is the score at each stage, and who might be doing best at each stage, or who can we learn from at each stage. And I said at the beginning, that does tend to be different across each different stage. It's very rare that we get an industry where we have the same brand multiple times or dominating the best practice. And similarly, we get here, we've got CBA in 3 stages, IND Direct in 4, BankWest in 3, Suncorp, ASB, Nationwide, all represented there as well, and Westpac. So again, a variety of brands getting the high score at each stage. And interestingly enough, even though HSBC get the highest score overall on the desktop, they don't actually get the high score at any individual stage, which is really interesting. What's also interesting is when you look at this is the clarity that there are quite often industry pains as well as brand pains. There's quite often an area where every brand and industry does particularly badly. And here, this is quite obviously external comparison. The average score for external comparison is only just above 20%. So this is around the area where actually I found a mortgage. I think it's really interesting, but you're on a short list. You've got 3 or 4 other brands that I'm investigating. And actually, at the moment, brands in either market don't sell themselves in terms of helping you do that external comparison particularly well. They don't provide easy ways, for example, of taking the information away, nice, neat emails with information saying, well, this is the rate you found, and this is why it's great. But also through to explicit external comparison in terms of features that the mortgages might have, features that the bank might have that would help do that external comparison. So that's something that no industry or no brand does particularly well in this industry. But as I say, we've got a variety of brands performing well across the journey, and a variety of brands at each stage. As we saw from the discover phase, it's really important in terms of final preference to convince consumers that your options are easy to understand and you have the best mortgages offers for my needs. This tends to differ between prospective and existing customers. Obviously, if we can look at just the customers that you already have, they might be remortgaging, or they might have a current account with you and thinking of taking out a mortgage. These customers tend to worry more around customer experience and service. Is the service going to continue being good? Just is the fact that you have been fine with my current account actually going to mean the mortgage is going to be fine? They're different products. Prospective customers, it is very much about this easy to understand, suitability to client specific needs. So you're trying to do a number of different things, particularly with the landing pages as consumers come in the beginning of their journey. The first thing, obviously, that consumers usually see is a landing page. Not necessarily the home page of the website. If they come through search or aggregators, they're quite often going to come straight through to the landing page. The more successful brands in terms of drawing consumers in are very much those who allow users to start that journey quickly. And this is very important in the discover phase as well. They aren't necessarily going to spend a lot of time clicking around your site. They are going to take a quick look and go, okay, yes, I'm going to be able to find what I need here. So that doesn't mean everything has to be on the home page. It just means that people have to go away thinking, yeah, it's definitely here somewhere. I'll be able to find it easily. So you've got HSBC with our mortgages. The images here, very clear, easy to find. You've got the quick links on the right. You've got the Yorkshire Bank in the middle. Find a mortgage deal to suit you right there. You've got the core key CTAs in the hero images. Hero images are fine, but make them work for you. Don't just have them as bland pictures. They should have calls to action within them. So you've got Yorkshire Bank, and then you've got, are you a new customer or an existing customer? So drawing consumers immediately in, minimal effort, and ideally no or very little scrolling on the landing page. Put that product funnel up there near the fold. You've got some other examples here of the hero image being used often very relevantly. So you've got Suncorp in Australia in terms of bad weather affected by recent weather events. Call this number, talk to us. You've got other banks, hey, students, you could earn $50. So getting consumers straight into the product funnel right there from immediately under the fold, or just obviously there, rather than using the landing page as almost as advertising. It's very much like drawing consumers straight into the product information. Here you've actually got St George, they're particularly doing well. Obviously, pages tend to be long, tend to have a lot of information on them, and that is something that you just have to deal with, particularly in this market. And consumers understand that there's a lot of information they've got to digest when looking at a mortgage. So this is where things like anchor navigation, again, can persuade consumers that it's going to be easy to find this information. They're going to be able to get around it quickly and easily. So you've got some examples here from Nationwide, from ING Direct. So getting straight into having that anchor navigation at the top. So you've got, say, with ING Direct, you've got features, rates and fees, tools and calculators, FAQ, how to get started. I can easily, as a consumer, find the piece that I'm interested in and go straight to it. even though, say, there's an awful lot of content here to navigate and to understand. I can get straight into the pieces that I'm interested in. But also, when I come back to do this again tomorrow, or to show somebody else, perhaps I'm getting a mortgage with a partner, I know I'm going to be able to find it again easily, because again, mortgages is a consideration journey. They're not going to make the decision here and now. They're probably going to go and do some research and come back. So they need to think about it. They need to think about, is it easy for them to do that once they've found something that's interesting? And again, this is another way of doing that, amongst other things. So this is the Bank of Ireland, which helps consumers on the home loans landing page by giving them choices as to where they are in their journey. So what kind of buyer are they? Do they actually have a deposit, or have they actually found something they want to buy? So it's very simple for consumers to say, right, this is the information that I need. This is how I'm going to be able to get it. This is going straight to content that meets my needs. The navigation is doing a lot of that hard work for me. ING Direct take a slightly different approach. Again, this is quite successful in the Australian market. So we have very clear signposting, compare home loans up front. So very clear what you're going to be able to do here. The tabs are above the fold, as we were saying a minute ago. There is quite a large hero image here, but the tabs are above the fold. It's obvious where the content is, and it's not just all, say, value proposition, all ad, all image. And all of those home loans are actually listed on the landing page. You can get to all of their loans from this page. So actually, when we ask consumers to find a product that suits their needs, the vast majority of consumers actually succeed. 65% actually succeed within a click. They some bounce backwards and forwards, but it's a very simple journey to find product information. Again, they haven't necessarily found the exact one that suits their needs yet, but they are a long way down being convinced that they're going to be able to, and it's going to be simple and it's going to be easy to do because the content is right there. They're not spending 3 or 4 minutes even finding the content. And this is, again, something particularly we look at in terms of the next stage in the journey. So we've just been thinking about perhaps first impressions, landing. Can I be convinced I'll get into the journey quickly? And then we get to the next stage. Well, actually, well, what have you got? Can I find details of all available mortgages? So what would I actually do in terms, or can I find it? And then what would I do? Because when people have done tasks, we ask what the impact of that task is. So would they just leave completely? Would they have no confidence in the site? Or would they, all the way through to good experience, would they actually choose this brand? And you've got actually the most successful brand here is KIWIBANK across all the brands that we look at. Nationwide does very well here, St. George, but actually the highest in terms of leaving people with a good impression, saying actually, yes, it's getting further and further down my consideration set, is actually KIWIBANK. Why is that? It's not necessarily because it's the speediest journey. It's not the case that journeys have to be the quickest in order to be the best. But what consumers have to be is that they have to be convinced that they found the right product. Each click is taking them to the right place. You've got 84% confidence here, 84% satisfaction. Even though, say, it wasn't the quickest journey, consumers are coming away saying, actually, I managed to find it, and it was a fairly easy process. Even though I had to make 3 or 4 clicks, I knew where I was going at each step. The navigation made it clear that I was going to the right place. Helped by multiple pathways to the range, the consumers did go to a variety of places on the way, but the journey is made easier by the fact there are multiple journeys, multiple routes to the information, depending on how people want to search. I mean, some people want to search, some people are going to personal banking, someone into home loans. Again, fairly obvious routes in, but both led to the information they were looking for. So depending on how you prefer to look for information, the way your brain works essentially, you could still get to the right information. You weren't funneled down the way, this is the way we need you to think about this, you have to come around this journey. This is very much about saying, well, actually, people are approaching this from different ways. Let's give them multiple pathways. Simple navigation, again, ING Direct. You've just seen this home page. But what's interesting about when we get past that home page is when you delve further into the site, the look and feel is pretty exactly the same. So once people have come to the home page and gone, okay, that makes sense, that looks easy, the rest of their journey emulates that journey. The call to actions are the same across the journey. They look and feel the same. They've got the same imagery, same colours. So actually, as you go through the journey, consumers are still in the same mindset. They're still thinking as they did on the home page, okay, this looks simple, this looks easy. The mobile tool, very similar. Again, call to actions look the same. What's really good about the ING mobile tool is that the call to action are large. You're going to be able to click these with a finger or a thumb. So many times we see mobile sites, they've got all the information you need, but actually very difficult to click on the correct elements and choice. When you actually got a very long mobile page, it's got multiple options. It's really difficult to click on the right call to action, and that's not the case with the ING Direct. NAB, the same, actually is another example. But again, they've got another tool here would take us down that next step from, I like the idea of what you've got, it looks interesting, but now I want to find if you've actually got a loan that suits my needs particularly. So need help finding a loan, what do you actually want to do, and then are you actually trying to pay it off quickly, do you want to fix the interest rate? And then they'll give you the options, but you can also compare them all. So a tool starts to help users actually make sense of the hundreds of mortgages that are out there. Again, similarly, First Direct, NatWest doing something similar in terms of asking a few simple questions, but also easy to use input field in terms of mortgages. It is hard often with financial service products on mobile because you are asking a fair amount of personal information from consumers. So sometimes it's hard to get that information out of consumers easily. But it's thinking about the size of the input field and the minimum amount of information you need to ask in order to be able to make those decisions and offer people that information. Again, NatWest doing something very similar. Key features in large text. Features of the product appear in a slide over, as the arrow at the top is. So you don't change page to find more information about the mortgage. It slides over and you can slide it back again to get to the range list. So simple navigation on the mobile helps people look at the different rates, see whether they actually suit their needs by going into them a little bit further without going out of the journey, and then come back again. So you can carry on their browsing within the research journey. And that's interesting, that's important when we get to this idea about how do I actually compare this product. Again, we've got hundreds of mortgages normally. They can be sorted in some ways. Yorkshire Bank actually offers very helpful dynamic filtering as well as a side-by-side comparison. So you've got this top options here, property value, deposit, term, with then lists, obviously filters out the particular mortgages. You can then click on a few in order to compare them. Those options are fixed to the bottom as users scroll. So they scroll down, say a list of 20 or 30 mortgages. They'll see at the bottom the ones they've particularly picked to compare. So you don't have to scroll back up and down again to see what you've chosen. Very important. And then you get the actual side-by-side comparison. Again, this idea that it slides over the current page and not taking consumers out of that journey. You're enabling them to do that comparison within the same journey that they're already on. They don't have to go anywhere, come back again. As soon as you take somebody out of the journey, open another web page, you will lose a certain percentage of them. So this helps them continue to do that within the journey. What's also really interesting here is that what you can actually specifically do here is highlight the differences. So if they have certain elements that are different, so fixed fees or whatever, the page will help highlight those specific differences rather than, again, help making consumers make all the effort themselves. This is very much what this is about doing and saying, we understand this is complicated, we understand this is difficult. This is not just a supermarket where we give you everything and make the choices. We're going to hold your hand and help you make choices through the process, informed choices, So you come away at the end thinking, yes, I found a product that suits my needs. First Direct is actually a good example of somebody who manages to do this reasonably well on mobile as well. This is a very difficult thing to do on the mobile device, obviously, because it's smaller. It's harder to put comparisons side by side, but First Direct actually managed to do it reasonably well. Again, you can choose 3 options, then you can see the options side by side, scrolling, and gives you more information, and again, call to actions at the bottom. So it is possible to help consumers do this, matching to needs through the mobile device as well as the desktop. So overall, there's been a whistle-stop tour a little bit through some of the research that we have conducted in home loans in the UK and Australia. Obviously, there is a significant amount of other information behind what I've showed you today. There are hundreds of data points in each of these studies. But I think some of the key things that we see coming out clearly through the research we've done in the last year, it's very much about understanding the journey, the touch points they take originally in the discover phase, and what's driving their shortlisting or driving their final preference for you, particularly as a brand, because that will differ between individual brands. And why are you losing people at this stage? What are the needs that consumers have along the customer experience journey to choose a home loan? When they're trying to find something that meets their specific needs, how well are you helping them do that? Know where you're losing opportunities, how you're maximising your share of wallet by preempting what they need. This is the idea we were talking about existing customers versus new customers, and facilitating both of those journeys. Strong anchor navigation that helps at the beginning and indeed all the way through the online journey to help consumers understand where they are and to give them the confidence that they're in the right place and they will find the right information. We saw it doesn't have to be the speediest journey as long as they are confident they are in the right place and they are going to find the information as they continue. And again, say very much about tailoring it to personal needs, interactive comparison, filtering, and again this idea of breadcrumb, where am I? Where have I come from? Can I get back here again easily and do this again when I need to make the final decision? So as I say, you've seen a very brief insight today in terms of the insight that we've got here for home loans. We obviously offer a significant more amount of data and research behind this, including obviously tailored analysis from micro level for your particular brand, all the way through discover phase and all the way through the consider phase. How are you doing against the competition, including workshops and advisory hours? So thank you very much for your time. I hope it's been interesting. If you have any more questions, please drop me an email at rebecca.jennings@globalreviews.com. That's rebecca.jennings@globalreviews.com. And thank you very much for your time this morning. Thank you.